A big welcome to today's session on profitability. My name is Andy Collier, and I've worked with and helped probably hundreds, maybe even on the thousands of business owners and entrepreneurs for over 40 years now. And you can probably see that looking at me. There's 40 years experience in that face. I have learned quite a lot in that time. But certain things have been with me, I guess, right from the early days. And one of the things that sort of stuck in my mind is that old saying that a number of you will already know. Turnover is more like vanity. Profit is more like sanity. The more modern extension that adds to that actually says that cash is reality. So you've got a nice little flow there, and profitability is in the middle of that sort of conundrum or equation. Turnover can easily and understandably, perhaps sometimes, actually be unprofitable and can often worsen cash flows, especially in the short term. So it's never quite enough to rest on what looks like a good sales figure or be easily seduced by perhaps a large order that comes in. But what exactly is profitability? And how could you take control of this key area so that you get all those three things we talked about sort of working in tandem and in sync, really, so you don't get things leaking out of the system? Well, we're going to explore that today, principally with two very experienced CFOs, Chief Financial Officers, Adrian and Sean. No PowerPoints today, just solid, real experience direct from the sharp end. Let's just say hello to each other before we get started. Adrian, would you mind just a quick intro on yourself?
Yes, thanks, Andy. Name's Adrian Message. I've been with the CFO Centre for 3 years now, and I work in combination in the Southwest and in London. And I've sort of looked at a variety of clients from gym flooring across to stone masonry to packaging and athlete travel and brake fluids. And I think my why is that I'm just curious. I just want to know. And so link that with I want to help. Really, when I'm with a client, it's all about how do I create empowerment, but also how do I create curiosity? Because I think curiosity is key to this.
Interesting. Well, we'll see if that comes out in your discussion areas in particular, Adrian. Sean, how about yourself?
Yeah, thank you, Andy. My name's Sean Brimacombe. I'm with the CFO Centre down in the Southwest region, covering Denwell, Cornwall, and Somerset. I really enjoy helping businesses turn around, scale up, improve their profitability, improve their cash flow, etc., etc. The vast majority of my work experience has been in retail, wholesale, hospitality, with a couple of years in manufacturing. I've been in the roles of both CFO and CEO. And my current client base is mostly focused around service-related businesses down here in the Southwest.
Fabulous. Well, that gives you a different perspective, of course, if you've been a CEO for a bit as well, because you know that partnership between the CFO and the CEO, you can see sort of both aspects really.
Sure.
Okay, so we'll get started into the detail. We've broken down today's discussion into a few key areas just to make a bit of a logical flow for it, rather than one big subject that we just sort of dance around, really. So we're going to start with sales, marketing, pricing strategies, and sort of the big level, really. Sean, I know this can be often a confusing area with lots of different definitions and bits of jargon flying around. Just kick us off with your thoughts on this larger area, please.
Obviously, in my eyes, a major profitability driver is the gross margin that a business earns. Gross margin being the difference between the sales price and the cost price. And I found in numerous clients, they haven't understood the difference between gross margin percentage and markup percentage. And often you hear, oh, but I'm making a 50% margin. But what is in actual fact happening is the person is taking, say, a product at a cost of, say, £10. They're adding on a 50% markup, arriving at a selling price of, say, £15, believing they're making 50%. Um, Markup is measured as a percentage of the cost price. Gross margin is measured as a percentage of the selling price. So if you've got a cost of a product at 10, you're selling it at 15, it's 5 over 15, which means a 33% gross margin, not a 50% gross margin. Um, so there needs to be an intense focus around that area because often I found people don't, they believe they're making a higher percentage than they actually are.
Mm.
Um, Gross margin being linked between your selling and your cost prices. Um, you need to focus on reducing your cost price to improve your margin. The lower your cost, the higher your margin. If you're buying raw materials or products for resale from a variety of suppliers selling the same product, I've always been a believer in maximizing your purchasing power and reducing the number of suppliers that you're buying from. It gives you a bit more leverage to negotiate better pricing. And it also assists you in settlement terms. If you can negotiate better settlement terms, instead of paying 45 days, you pay 30 days, or instead of paying 30 days, you pay 15 days 15 days to 30 days. Um, Whatever you can do to extend your payment within reason is going to give you more free cash flow to invest in interest-bearing deposits, which is going to add to your profitability just on the side. And also, I'm a firm believer in negotiating settlement discounts with suppliers. If you can negotiate a 2% settlement discount after, say, 30 days, that kicks straight back down into your gross margin. So there are ways to reduce your costs. And then a large element is obviously focusing on the selling prices. Do you research the market for competitive products and services? Do you undertake regular price comparisons and adjust your prices accordingly? I'm a firm believer in being able to command improved selling prices, higher prices, giving you higher margins if you are consistently able to provide outstanding quality products and or services. You're reliably always in stock. Delivery is guaranteed on time. Service levels are responsive, friendly, and efficient. People need to want to basically buy from you.
Mm.
And you need to identify what differentiates you from your competitors. Why would someone want to buy from you rather than your competitor? What is your unique selling point? If you don't have a unique selling point, I think you need to try and develop one and then capitalize on that. I'm also a believer if you are able to provide product and service guarantees, which increases your product confidence in the public eye, allowing you to again command a higher selling price.
So there's a couple of things, Sean, you've mentioned there just before I move to Adrian. You talked about being a firm believer in reducing the base to sort of maximize potential. But I guess the flip side of that is if you end up with too much concentration in one or two large customers, you're sort of at risk. Where does the balance lie with that equation for you?
Yeah, you obviously can't commit to buying everything from one supplier. You're just exposing yourself to a risk. But instead of buying from, say, 5 or 6 suppliers, cut it back to 3 suppliers.
Mm.
So you're giving a big piece of the pie to each supplier, but you're not restricting your supply if there is an issue with one of the suppliers.
Yeah, understand that. Although it just something just occurred to me, Sean, although we're not doing PowerPoints today, but there is a lovely matrix I've got back in my office which shows how the effects of price increases on profitability impact and actually how we won't go into it in detail today, but how a small increase in price can actually have a very large increase on profitability, but only if you've got a strong brand and people want to buy your product. So it's an interesting area, really. People are often a bit scared of approaching pricing because they don't want to rock the marketplace. But with a coherent strategy, it's actually one of the most powerful levers a business can have, really. But you need the confidence to be able to pull that lever and play with it. So I said, I'll try and get that graph that matrix sent out to people on the call if people would like it. If you would like it, just send me a message in the chat function. Okay, Sean, that's a great introduction. Adrian, I was going to come to you on that same sort of broad heading, sales margins, pricing strategy. What's your perspective and sort of experience in that area?
Well, if you think about the profit and loss, it's an amalgam of sort of decision making. And I think what is really key is how you're collecting the data. Where does it go into your profit and loss account? If you imagine a profit and loss account is made up by lots of different buckets with different names attached to them, is that structure right for your business? What I've noticed is that the number of companies will quite happily take what's the zero profit and loss or the sage profit and loss and not really think about, are those the true buckets? Do they really represent what the business is about? And do I really understand and can I see what I need to see quickly from the profit and the loss? So for me, it's all about how can we make sure the profit and loss represents the business. And I just find it really curious that for some organizations, they're quite happy to let their accountants do something on an annual basis, or they will get in third-party support as a bookkeeper who doesn't quite understand what success looks like.
Hmm.
So I think what is really key in this to support what Sean has described is how do I make the profit and loss account as pertinent and as relevant and as accurate as possible to me? Because ultimately, the data's got to be going in the right places to enable you to make the right decisions. So I do think there's a really important thinking process to go through as an owner or as an accountant or within the finance department. Because I'll tell you one thing is a GL structure has a mystique to it. And you know what? Over time, it becomes more and more difficult to change. So the quicker you can get into that structure, the quicker you can design it better, then therefore the more information you can get out of the P&L. Because what happens is when you start off, you're quite happy to have, let's say, all turnover going into one account, one bucket. And guess what? Finance will say, I can do a great analysis for you. They'll go away and do a great Excel spreadsheet, but that creates time. It takes away that decision-making time that you need to do things quickly. So the key message for me is really think about what you want to get from your P&L, confirm where you want the costs are, and actually think, do I want to see a sale and a cost of sale by a channel, by a customer? What do I want to see? You may not know initially. Be brave as you go through the process. Finance should be changing the structure for you. They should be changing those buckets for you so you can extract the right data that you want from that P&L.
Yes, that's a bit of a throwback for me, Adrian, really. When I was a very, very young sort of trainee accountant, and I was put into a client of the audit firm to redesign the chart of accounts. And frankly, I didn't know enough about business at that point to actually design the chart of accounts. So I think I just copied what was already there, which was a massive opportunity missed to sort of really make an impact. Because as you say, once something like that structure gets ingrained, actually, it's quite hard to unravel some of that, isn't it, without starting all over again. So it does need moving to a new system in particular, it does need some really good, deep thought with the right people to sort of get to grips with that. Otherwise, the boat's set off really, and it's quite hard to bring it back. We're going to move on to that area of deeper understanding of the different ways of looking at profitability. And I think something that just struck a chord when Adrian was talking about years ago when I was working as for the first time as a part-time FD, a CFO, most people were using Sage 50 in the SME type of smaller business area. And a typical report would just have a couple of lines at the top. It would be sales, cost of sales, and then gross margin. And that was it. And it's like, is this good enough? Or should this be more? And it's like, actually, how can I tell? It's like it looks okay, but there was no granular detail. And then a few overheads and you had net profit. And it's like, well, that wasn't really a vehicle to drive the business. So I'm going to come to you now, Sean, around this area of different ways of looking at profitability in a much more advanced way than the Sage Line 50 I've just described to you, customer, product, channel, etc. How do you go about that?
Andy, what I normally do is I initially focus on a product margin analysis. In a very rare case, you find businesses have the same markup to every single product, which is very easy then. But in the majority of cases, different products have different margins. So if you do a full analysis on that, it will provide insight into which are your most profitable products and or services, and where your focus should be on selling those particular products. If they're problem products, then you've obviously got to review either the cost or the selling price of those individual units. But taking that the next step, I look at regularly producing customer profitability report, which essentially should indicate the total cost of the product and or services provided to every customer, including delivery costs, cost of returns, settlement discounts allowed, and compare this to the total sales value to that particular customer. The question is it profitable to deal with that customer? Are his returns high? Is he focused only on low margin products? Are the deliveries to the customers efficient? In an extreme example, maybe the customer's bought £40 worth of goods from you and he's 50 miles away for a delivery. It's not going to be a profitable customer. So I think that really sums up the sort of margin analysis that I do, product and customer analysis, identify the problems, and take the corrective action.
So that feels like it's a bit of a throwback, something that I guess I looked at many years ago, which was like activity-based costing, where actually you don't just look at the sales and the cost of sales and the gross profit. You look at some of the hidden costs in the business that can be attributable to specific customers or specific channels. And I guess that's getting us nearer the true level of profitability because you've got a customer that returns a lot of things, a lot of credit notes, that ends up as an overhead quite often or a separate line somewhere and doesn't impact on the customer potential. Is that the area that you're really thinking about there?
Yeah, most definitely. I think there's also if a particular customer is not proving to be very profitable, it doesn't necessarily mean just drop the customer and delete them off your books.
Hmm.
But maybe look at increasing the range of products and services that you sell to them through cross-selling. Maybe you can sell a bigger range of product to them, or upselling, you can sell a higher volume, filling a delivery truck, etc., etc.
So that sounds like you need to pull a few layers apart, don't you,
Correct.
to get at what's really going on,
Yeah.
which a lot of, I guess, traditional accounting packages and accountants would struggle with that concept really, because it's actually needs some real interrogation of the system.
Yeah.
Okay, thanks, Sean. We'll leave you there for the minute. Adrian, what's your perspective on this area, these sort of different ways of reporting and looking at profitability?
I think for me, the key is to understand the accuracy of the data that you've got within the system. And this comes back to how, in my opinion, the finance team could look at themselves in terms of their structure. And it's based on their allocation of time. Part of their time is spent in actually dealing with all the transactions. Have they got all the transactions into the system? Are they all there? Then the controls around the system actually, is the bank reconciliation being done? Are debtors and creditors and stock all up to date? Because ultimately, if you've got all the transactions in there and the controls around those transactions ensure that accuracy, then you can start doing the reporting. And that's where I think the fun is. You need to understand your base is solid, and then the analysis can then start. But the analysis can only come from finance if they actually understand the business. Are they out and about within the business? Do they understand the nuances? And are they curious? Are they asking those
That
questions?
word again.
That word again. I love it. Um, are they really there as that service center? Are they there to, I don't know, find glimmers and find little sort of different points of view and challenge and ask those questions in a constructive way and empower departments and empower individuals to ask questions and get that sort of cycle going? So if you got the transactions there, if you got the controls around those transactions, then you've got the reporting, which could be a variety of ways, which is the P&L, which does illustrate the profitability. But in that reporting, you can also have the sales analysis by customer. You can have that data that drives your business. But you've got to know what are your keys for success? What are your KPIs? Because there's always a risk that finance does the traditional management accounts, but how long do they take to come out? Is there data or knowledge that can come out on a daily basis? If then controls, transactions, and reporting in place, then strategy can emanate from that. All those four need to be sort of aligned and sync. And there's a high level of synchronicity with those four elements. And it's actually quite an interesting challenge. And I would throw it out to you is talk to your finance teams and find out how much time they spend in each of those quadrants, because that will then enable you to understand, are they resourced, under resourced, they got the right training in place, are they doing the right things? Because one client I went into and had this conversation, and it transpired that 65% of the team's effort were in controls, stroke transactions. They were never going to do the reporting. So all this really important reporting and strategy will never occur if you haven't got those right resources in place. So really for me, it's about reporting is understanding what you want, making sure that report, i.e., the profit and loss, has the right buckets, therefore the right numbers are going into them. Wrap around that. Is there completeness? Is there accuracy? Does every month this number goes in there, or is it a bit random? Therefore, who's doing your work? Are they qualified? If that's in place, to me, the work, the sort of ideas that Sean's talking about, very much can happen. You have that, I guess, that sort of eloquent decision-making opportunity.
Feels like, because like a set of management accounts that takes a month to come out. I mean, that's just a historical document, isn't it? Really, it's like you need a suite of reports, short, medium, and long, that drive the potential to make decisions that impact on the big strategy, which I think is what you've talked about quite well there.
I think there's is really interesting. You again, I would challenge this as an owner of business. What is the close process? Again, it seems like it's sort of slightly mystical event that happens in the finance department. In my view, it's not. Every day is a close. And in many ways, you could just close on the first day. You just got to have the mentality to close on the first day. What does the business want? What do you need as a business leader? Because having management accounts 3 weeks later, done internally or by your external advisor, it's a bit of a waste of time.
Yeah.
It hasn't helped you. So I would always challenge what is the close process? And why does it take 10 days?
Mm.
Because actually it doesn't have to, because guess what? You can start closing the month the week before the month closes.
Yeah.
It's not,
Yes, all data is just a bookend, really, isn't it, for you put on your shelf?
yeah.
Just had a slight divergence into the chat while the guys have been talking. So thank you for the early questions. Great to have a client on board, Tim. Glad you could join us. Hope that's going well with Jason. I'm hoping we arm you with a few things to go back and talk to him about. Sandra asked a great question about Pareto and how that fits in. I'll leave that till the end, Sandra, but that's a really good question. I'll come back to that. Quite a few people wanting the matrix, which is brilliant. I will get that sorted, and some good comments. And a really good question from Kieran, which is actually on this very topic. I'll stick with you, Adrian, for the second about this deeper analysis, customer, product, channel, all these different ways of looking at profit. Who typically does this analysis in a business? And do you find most businesses you met have that capability and data to actually get there, or does it need a bit of an earthquake to sort it out?
It varies. If I'm being totally honest, some are just surprised that there's a management accounts that can be produced on a monthly basis, or or sort of bi-monthly basis. I think sometimes it's the questions need to be asked, and I think it's having somebody to create the story or the imagination to drive the analysis. I think it's having finance people who are curious, who want to create the glimmers for you. I think that's key. For me, it comes back to a person choice. It's the types of people you got in your team. And if you are, I mean, I know that if I worked in a large organization which had lots of rules, that probably wouldn't suit me. But therefore, give me in a sort of slightly more chaotic environment. I enjoy that. That's my DNA. So I do think there's a real human aspect to this, and it's in it that helps drives the thinking. Probably not necessarily the answer you're expecting, but that's just what I think.
Yeah, and I guess it's when you look in the world of finance, the growth of the financial planning type analysts is actually an area that people are getting more into the data manipulation and looking at the data warehouse and actually pulling out meaningful data to drive decision making elsewhere in the business.
Yes, but it's just remember, have a really strong basis of how the data is coming into your
Mm.
environment.
Mm.
There are many sources of data, and because everybody knows if the wrong data is coming or it's inconsistent, you're just going to get inconsistent decision out of it. So it's not necessarily glamorous, but when you get it right, it's exciting.
Yes, and another old favourite saying, of course, is garbage in, garbage out. So you've got to have the structure right to be able to manipulate it. Fabulous. Right, we'll move on from that topic because we have a couple of areas we definitely want to cover. I'm going to come to Sean next. So we've talked about sales, gross profit, pricing. What about expenses? What about managing expenses and areas of efficiency, Sean? Because I'm guessing one of again, another old saying is that if you can cut a cost, actually that drops to the bottom line quicker than increasing sales. The impact is sort of more direct. So what's your thoughts on that area?
Yeah, I think everyone thinks along the lines gross profit, less expense, gross margin, sorry, less your expenses means profit or loss in some instances. And the lower that level of expenses, the higher your net profit. I've can only speak from experience, and I've seen it a few times. And there've been businesses in distress, and their business owner just comes in and cuts everything, cuts all expenditure. It has a dramatic negative effect on service levels in the business, and actually makes the situation worse. Your turnover drops, hence your gross margin or gross profit in pounds in pounds drops. So you end up in a worse off situation. I think there needs to be a deep dive into your monthly expenses. And I agree with Adrian, the sooner after month end that these are made available, the better, the sooner you make that decision and take the corrective action. But do a deep dive into your monthly expenses. There should be, as a business owner, you need to ensure that you have a complete understanding of every single expense item being processed every month, and cease the unnecessary items immediately. In other words, eliminate wasteful expenditure. I've seen often in mature businesses, they are incurring expenses which are no longer relevant. They've just been paid for such a long time. It could be subscriptions, memberships, SLA, service level agreements, software licenses, whatever it might be. They sit there in so many P&Ls. It's actually quite frightening. And people just because the bookkeeper's always paid it, the bookkeeper continues to pay it. So it needs that that intervention. More often than not, your biggest expense item will be your staff costs. So that's a separate exercise all on its own. And I'm not a fan of redundancies at all, but you need to focus on your staff and ensure all staff are contributing towards your profitability.
Yeah, so everybody drives profit in some way. It's just the different ways they do it and working out what that impact is.
Yeah.
That's great, Sean. Thank you. I'm just going to come back quickly to Sandra's asked made a couple of good points here, really, that their P&L accounts take 3 to 4 weeks to presume, which we feel is too long. I think we probably agree with you, Sandra, that is a bit too long if you need it for decision making. And what we're talking about there is having a look at the right people doing the right things. So we'd very happily talk to you individually about that, Sandra, because that's a very specific problem. But Sandra's also mentioned how she's renegotiated debit card transaction fees down from 0.7 to 0.2%, just on a couple of calls, really. And I think the wider issue that Sandra's talking about in the chat is how some expenses can just creep upwards because nobody really looks at it. And you get the annual price increase letter and it's gone up 10% or something like that, but actually then it compounds itself because it's not a big cost, but they're sort of creeping upwards. So I guess you've just got to look at all those things and make sure you've got control of all the key areas, Sean.
Yeah, a classic example would be insurance premiums. And the business owner has known the insurance broker for 20 years and he's always provided good service. He's always been there for him. There's no problem with the insurance, etc., etc. I have a client that I managed to eventually convince to review his insurance. I put him in touch with an insurance broker and he saved 40% on his premiums. 40%.
Yeah, fabulous. Thanks for that, Sandra. Adrian, I'll come to you in terms of expense management and that other side of the equation in getting into net profit. What's your
Mm.
perspective on that?
I think it's quite interesting. I think there is how to describe it? When things are tough, people look at the P&L more often. And I think this is clearly the wrong thing to do. But I have certainly noticed some clients, if turnover is in line and you're getting a net profit, then and it equals budget, then in many cases it's move on. But actually, I think this is building upon Sean's points, is very much key to actually understand what are the drivers to those costs within your P&L, and does it actually make sense? Is there an increase in direct labor or indirect labor to your manufacturing output? And this is where I think it's key to continue that curiosity. And this is where finance, I think, can play a part. It can actually start working with other leaders within the business, other areas within the business, and get those little understandings as to what's going on. I mean, a good example, a recent client I was working with, temporary labor costs kept on going up and up, but the turnover was staying the same with indirect labor. And we had the conversation. We go, this is mad. But actually, it transpired it was that actually we were having problem in recruiting forklift drivers, particularly around Christmas, because they can go to the Amazons and get much higher wages. Therefore, you're not necessarily getting the right people. So therefore, you can change how you recruit people. So I think there's always clues within the peer. And I think it's really important to have those discussions at the appropriate level, the appropriate depth, and the required comparatives as well, budget versus last year, whatever you need to do. But through that process, I think it's a great opportunity to educate, to
Mm.
actually get people interested, and to actually sort of take away a fear or a mystique of finance. The numbers are just a whole host of decisions. They are decisions that are being made correctly or incorrectly. But ultimately, there's human behavior there. So why not work with the teams, get that curiosity going? So therefore, when they think about, okay, I've got to have a new forklift contract, what could success look like here? and therefore build a structure that is robust but also understandable for the future. So for me, it's the P&L gives lots of clues, not only on historic, what's happened in the past, what's happening now, but it gives you clues for the future, how you can set yourself up for success.
You've just reminded me of something again from my younger days, Adrian. When I went into a business for the first time, and I looked at the finance director that was in place, and the head office team that I was working for said, "What do you think of this finance director?" I said, "He's hopeless. He's never at his desk. He's never doing the numbers. He's never doing the accounts. He's spending a lot of time talking to the head of operations and the head of sales, and he's in there with the MD." I'm thinking, he's not a finance director. And the wise man from head office turned around and said, "Andy, that's the best finance director we've got." He says he knows what's going on in that business because he's in touch with what's happening in other departments, and he sees how that gets reflected in the profit and loss account. I guess I learned that one fairly early as well. Excellent. Thanks, guys. Let's move on to a different area and part of looking ahead, really. Forecasting, budgeting, preparing for future profitability, I guess, in this context. Sean, how do you go about that?
Yeah, for me, it's like getting into a vehicle, starting the car, and not knowing where you're going. You need to have a a destination in mind, and that destination, when it comes to your books and records, is financial forecasting and budgeting. Um, I'm absolutely 100% insistent on the preparation of monthly and annual budgets covering sales, margins, expenses, net profit targets, utilizing all the staff involved to buy into the whole concept, buy into that target. It's not just someone sitting in an office, the finance director or the managing director, just saying that's where we're going. It just helps create a business strategy throughout, not just total direction from one person in the organization. Um, and then producing your P&Ls, which Adrian is insistent on needs to be done within 1 or 2 days, rightly so, um, and compare and track against your budgets and prior year results, highlighting variances, positive and negative. If it's a positive, can we do that in other departments? If it's a negative, and if we over budget on a certain expense, why has that happened? What corrective action do we need to take? So to me, it's an absolutely essential tool in running and managing a business.
Hmm. Fabulous. Adrian, what's your perspective on looking into the future with the crystal ball?
A good question, Andy. I think the budget is a real opportunity, or the forecast, to actually think as a collective, as an organization, because ultimately you are sort of looking at what's happened in the past and how could it unfold in the future. In many ways, you're putting a stake in the ground. You're saying what you're going to invest in, but you're also saying it's what you're not going to invest in as well, which I think is equally as important as what you're going to invest in, because you are then aligning your budget to your strategy and where you want to go. So many ways, the budget is key because it is that thinking opportunity. And I would very much recommend that you can do budget, you can do a budget very quickly, but if you've got the time, try and break up your thinking process, maybe into a couple of meetings. One could be all about the sales number. One could be about cost of sales, and picking up on Sean's point that labor is quite high. One could be about labor, and really just work through those in a free form way as to individually what they could look like, then combine them, and how does that work out?
Hmm.
But what I would challenge is that the real risk of budget is that we make some assumptions that last year was right, that we're building on something which is already right. You could, and I know there are theories on this, is go back to zero-based budgeting. Start from zero and say, okay, what do we generally need here to move the business forward? Because as Sean has said, you can build up those insurance costs and just assume, well, 5% increase is right. So it is a challenging process, but it's a one where I guess there's always something else to do on a day-to-day basis. Give yourself the opportunity to look at what's going on. And through that, you'll then create the P&L for the future in the format that you need that makes sense to you. And here I just want to apologize for this. I just want to link in the balance sheet. I I'm sort of a strong believer in the balance sheet. I mean, ultimately, as I think as you're aware, the balance sheet on one side has the history of the company in terms of profit or loss over the past X number of years, and then in terms of retained earnings, and then that's balanced with your assets and liabilities. And in a very simplistic world, if you get everything right, you'll be balancing one side of retained earnings against a bank account with all the cash in it. But clearly, it's not like that. So when you budget, really think about actually what assets and liabilities do we want to build up to help to enable us to grow, to develop, to make choice. So
Mm.
in summary, the balance sheet, I think many times it gets lost in discussions. It's the last thing that people go to. I would advocate have your meetings the other way around. Start with the balance sheet, go to the profit loss account. And see
Very radical.
um,
Right, we've got a few minutes left. I do want to come on to Sandra's question, but just a quick one from you, Sean, perhaps a final word from you. In terms of like, we obviously, we as CFOs, we look at a lot of the numbers and the systems and the processes, but I think I get involved in the culture of a business, and how can working around the culture and the people drive profitability, would you say?
Yeah, it's so important, Andy. The leader of the business, in my eyes, decides on the culture of that business. Um, if he's an energetic motivator, that kind of culture is going to permeate throughout the business. And as an example, on expenses, if the owner of the business has a couldn't care less attitude about expenses, that's going to permeate throughout the staff and they're going to have exactly the same. Your expense levels are going to go through the roof. If the business owner has a very astute knowledge and awareness of expense levels, questioning everything, that will permeate positively throughout. So it really, a lot of that depends on the owner manager of the business. Um, but you can also incentivize staff in various ways to improve profitability. You could, if you have sales reps on the road, you could incentivize them. The higher the sales they achieve, they get a certain percentage. You could incentivize office staff, giving maybe a monthly award on the best cost saving idea, et cetera, et cetera. Um, there's also another way of using incentives too, and that would be offering some kind of volume incentive to your customers in the form of a rebate. If the customer achieves a 10% over prior year in business through you, offer them a 1% additional settlement discount or a rebate payment paid annually, quarterly, however you structure it. It'll certainly encourage your customers to buy more from you.
Okay, I'm just got Adrian. I got one last one for you, which is what Sandra was talking about earlier. Pareto 80-20 rule. Do you find this applies around? Let's look at channels of profitability. So, do you often see that 20% of the product of one of our customers actually drives 80% of the profit, or does that not apply in this case?
I think it definitely applies, and it's a good rule of thumb. Look at your top X number of customers. How much profit do they bring in? How much do they cost? And it gives you an immediate opportunity to really sort of focus in. And I find the Pareto rule quite good. It's like making a decision. If I'm 80% sure, I will never be 20% or 100% sure to
Hmm.
return sets in. So I think that's a good approach because ultimately it's going to give you a good sense of your P&L. If you think it's 80% correct, the shape is probably correct.
Yes,
So
and it's interesting, isn't it? Because I think a lot of dyed-in-the-wool accountants will want something to be 100% accurate and can spend a lot of time getting there. But actually, if you get 80 to 90% correct and make some big decisions on that, actually that's in pretty good hands already.
Yeah, the important thing is to make decisions.
Yeah.
Finance can tie you in knots. I hold up my hand, I've done it
In the past, in
in
the
the past,
past.
clearly. But no,
Um,
it's you've got to be brave, you've got to make decisions, you've got to move forward. Standing still isn't an option.
yeah. Well, look, thank you both. We have reached the time limit, so I know people do like to finish on time and get away. If you want to say goodbye on the chat function or anything, please do, but we'll effectively wrap up. Thank you very much for listening to us today. Hope you found that useful, sort of concrete, real life sort of finance, really, and hopefully giving you some inspiration as to what you're going to have a look at next to drive that profitability number. The old saying still applies, so please keep that in your minds. Okay, thank you all very much. Thanks for those thank yous. If there's anybody who would like to ask us a specific question, please do. You know where to find us. And hopefully you'll be able to join us on a future event on a different but related topic, because all things do intermingle together in those financial accounts. Okay, thank you.
Thanks,
Have a
everyone.
great rest of
Thank
the
you.
day. Thanks, Sean and Adrian.
Thanks,
Okay,
Bye.
bye.